Welcome to In Early, the crypto podcast, where I speak to those at the forefront of the digital asset space, telling real-life stories, discussing the growth and growing pains of the industry, and exploring how blockchain technology has made an impact on people's lives. My name is Matt Green, and I'm the blockchain litigation lead at Shoesmiths. This week's episode features Katharine Wooler, the Business Unit Director at Coincover, a market leader in protecting cryptocurrency from hackers and human error, providing services like key retrieval and re-access to crypto assets, which has led to a partnership with Ledger. We talk about what Coincover does, as well as how it can play a key role in ongoing US litigation, Ferguson and Coinbase as an expert. We also look at Coincover's response to the Treasury's Future Financial Services regulatory regime for crypto assets, as well as thoughts on the Digital Pound and CBDCs generally, contributions to Crypto UK, and Katharine's recent feature in Forbes, considering the rising value of crypto assets despite a tough period for the industry. Katharine, thank you for coming down.
Thank you very much for having me.
Brilliant. I think let's just get straight into it. So I met Adam Smith, the co-founder and the CTO of Coincover, maybe about 3 years ago, something like that, when the industry and the business was quite a lot smaller. And when Coincover was, as far as I'm aware, more to do or almost exclusively to do with insurance. Since Coincover is now a major player in this space, can you tell me about who Coincover are, what its main aim is, what services it provides?
Yeah, sure, no problem. So the insurance element to what we do is still there. Of course, we were born out of a number of projects with which insurance was an element. So I think really at its core, what we're trying to do is solve two of the really massive problems with crypto. So the first is that people lose access. One of the things I love to say to a room full of people, whether it's 10 people or 500, is put your hand up if you have never had to press reset password. And if it's, your emails at work or it's, an online shopping service to do your food shop, that's fine. Mm-hmm. For crypto, that is often a massive problem because you lose access. Or people that have, mined tens of millions of pounds worth of crypto and then it's, lost forever. Mm-hmm. So we assist a significant proportion of the industry with making sure they don't lose access. So we back up their key material. And of course, the second massive problem that we see in crypto morning, noon and night and in the press pretty much daily is hacks, scams and theft. So we have transaction monitoring. So we try and reduce those instances. And essentially what we're trying to achieve is that I think personally, I feel what's missing from crypto as an industry is that trust element. And if we can solve that, we can allow the industry as a whole to reach its full potential.
So there seems to be sort of two arms to this. There's sort of the monitoring and recovery side. And I suppose the recovery side sort of falls into your sort of seed phrase type stuff, right?
Yeah,
back up. So it's back up and then sort of recover, etc. I want to break it down a little bit so I understand exactly how it all works and what services you provide. Your site says Coincover offers unique technology, right, that shields digital assets for crypto companies and individual investors. What is that unique technology? Is that something you can share?
Yeah, sure. So we built it. Mine's much finer than mine, the CTO that you mentioned. Mm-hmm. So we've got military grade secure software, which means that we're not a custodian. We're not going to hold on to your crypto for you, but we have technology which helps recover it should the worst happen. So that's in the case of the key material.
Yep.
In case of the transaction protection, we are a number of companies out there that have big data. So if you say, I woke up this morning and, my name's Matt and I want to try and move $100 worth of Bitcoin, there's plenty of companies that will say, is that a good idea or a bad idea? Mm-hmm. We do that, which is great. We protect millions of wallets. We've analysed billions of transactions. The thing we've got, which to my knowledge no one else has got in the world, is we've managed to get protection from Lloyd's of London. So we're underwritten by Lloyd's of London. So should the worst happen and you incur loss, we have the ability to put that right.
And as of the date of this recording, we believe that you're the only one who...
As far as I'm aware, yes. I keep saying it and no one corrects me. So, and to write in if someone knows differently. And look, there are pure insurance providers out there. They're great. I share stages with them at panel shows at various events. I think, particularly being able to get sort of that professional indemnity insurance in crypto is relatively recent. We always make the joke about how would you insure the first car? If the car's only just been invented, you don't know how fast it's going to go, how likely it is to have an accident, how bad that accident's going to be. So the birthplace of crypto was, of course, really hard to insure, right? So fast forward to today, there are some insurance firms out there that do pure insurance. We're a little bit different. We're a tech provider, but we have an insurance backup to what we do, which has been really popular with our 350 or so customers, which is great.
So in terms of insurance then, if you're saying you're underwritten by Lloyd's of London, when would that kick in? Because you're not providing, as far as I'm aware, correct me if I'm wrong, an insurance product, you're providing tech. So how does that kick in? Why does that add value?
So look, pure insurance is regulated by the FCA. That's not what we provide. We do something a little bit different. We have technology, which in the case of failure, the unlikely case of failure is what we say when you're flying a plane, we have the ability to put that straight. So there's a limit to that. Most of our clients are looking up to $5 million worth of coverage. For those that want more, that's fine. We can assist them with that. But essentially, there's no equivalent in the old world, in the TradFi world of, the financial services compensation scheme. So you have money in the bank up to a certain limit. If your bank goes bust, they'll put it right. Those things just don't exist in crypto. I suppose another good example would be all the protection you have on your credit card. If you go and buy a T-shirt and the shop won't put it right and it's wrong, your credit card will. So I think those sorts of protections, whether it's for the consumers or whether it's for the businesses, just haven't really existed. So we seek to try and address the two major problems with an insurance backup, which has been really popular.
So who are your customers, and is it a subscription model? How does it work?
Yeah, sure. So we're a traditional SaaS business, if you like. We're a tech provider. We've been really blessed with some fantastic customers. We've got about 350 now across a huge variety. So essentially, anyone that has crypto is keen to see it protected, which is great. So that can be anything from an exchange, a hedge fund. We've got governments that use us. So a huge variety. Really, anyone that is either got crypto at rest or crypto at move.
And they, I guess, pay for use of your tech. And if anything goes wrong, then again, that policy underneath sits.
Yeah, exactly.
So to my mind, it may well be a win-win for customers.
Yeah, sure. So look, ultimately, we are looking to reduce risk and cost. One of the things that's hugely interesting, I come from a crypto background. We were talking before we started recording that, if you've been a lawyer or a mechanic or a hairdresser for 4 or 5 years, it's nothing for crypto. Obviously, it's forever. I've worked for a number of crypto businesses now, whether it's an exchange, I've done some work in health tech. I'm really passionate about the power of blockchain and the power of crypto. But what you often see in these exchanges is that they're essentially trying to self-insure. So they kind of look at their balance sheet and go, oh, we were doing quite well, particularly before the crypto winter. And, what we expect a certain proportion of our transactions to go wrong. So let's just say it went wrong for you or I. That's really bad reputation. We've both got massive followings on social media. No exchange wants you or I online saying, well, this happened and it's wrong. So the self-insurance is great. The challenge is when you get big systemic problems like, say, FTX is a massive problem.
So collapse or a massive hack.
Yeah, exactly. So we're trying to say, look, we hope the worst doesn't happen, but if it does, we're here. So like many sort of fintech SaaSes or regtech SaaSes, we are looking to reduce risk for our customers, and in turn, they provide that to their customers, which is really popular. And I think particularly with some of the regulation that's coming in right now, regulators worldwide were quite slow to regulate crypto. Not the first time new technologies come in, the regulators gone, oh, we're not quite sure what to do about that. And I think there's some really interesting questions being asked by regulators globally about, okay, well, what can we do to make this safer? And actually, a number of regulators are now talking about you must have third-party key material backup. There's regulation coming in a number of jurisdictions which talks about kind of try not to get hacked. It is to be clear. Yeah, exactly. Yeah. No, but I think culturally, I know we're going to talk about a particular case in a few questions' time. There's a big difference between the position of try not to get hacked and you must have robust policies and processes not to get hacked. It's your responsibility. And those are two, I shouldn't be lecturing a lawyer, but intellectually they're quite different positions, I think.
Do you think then that Coincover have been a massively, let's rephrase, have Coincover been around really providing a service to the industry before it was needed, or has it always been needed?
Oh, wow, that's a really good question. So I think, we have some amazing investors. We're at Series B now, and I think for innovative and fast-growing, fast-scaling businesses, we're a reasonable size now. We've got 60 people. We've got 350-ish customers. We're on Series B. Whether you lead the market or whether you're late to the party is interesting, right? And you kind of don't want a very crowded marketplace. So I think, we're very focused on making sure that crypto can really reach its full potential.
Yeah.
And particularly for the way that our services are priced, I would love our service to be in every crypto business in the world.
It just makes sense that it just seems that having spoken to you before and done a bit of research, it's such a good solution. And you guys have been around for such again, in the world of crypto for a long period of time. It's almost as though this service was available prior to anybody or any huge institutions needing it. And now that they do, they can come to you guys knowing that you guys have been in the market for a while.
Yeah, sure.
My understanding of it.
Yeah, and look, I think that's about credibility, right? And I think the crypto infrastructure, as you say, is relatively new. I come from a TradFi background. I come from a long sort of fintech career. So, it made sense to me that a lot of the innovation is with really small, plucky startups, and it can take a while for that kind of message to get out there. And there's obviously that sort of critical mass moment where, we're very forthcoming with the customers we have and who we protect. And from my perspective, I would love to hear someone say, "Oh, I won't use that exchange or this service because they don't have Coincover in their workflow." That's kind of something
the ultimate
we'd like to see.
Sale, right? That's
yeah, sure.
I'd like to dig into a little bit more about some of these services because I think it's useful to understand. We can talk about these phrases in abstract, but it'd be good to sort of dig into a little bit more. So there are 3 core services, really, as far as I'm aware. And you'll correct me if I'm wrong. There's theft protection, disaster recovery, customer protection. So let's sort of take these in turn, if that's okay. Theft protection, it's about monitoring and monitoring services. And I think I've got a quote on my sheet at least. So it's got to be quoted from somewhere. It says, preventing anomalies from unauthorized access. What does that mean?
Yeah, sure. So the theft protection is our transaction monitoring service. So there's a number of other players in the marketplace that will say, going back to your fictional $100 worth of crypto, you're trying to move some crypto. There are plenty of big data businesses that will tell you and risk rate essentially. So what we're saying is that on the basis of the data we've got, which is a great data set, we're the only people that can price the risk right now. So we can make sure that we've got a great whitelist of people we think are safe for you to send your crypto to. So that from the perspective of, well, hang on, what if it's a hack or a scam or it's theft? Well, if it turns out our data for any reason was duff and actually great aunt Maureen was not a hacker yesterday, but unfortunately today she is. Right. If we've got that wrong, we have the ability to put it right for you.
So does it prevent withdrawals from your clients' addresses until a monitoring service has been conducted, and then once all the green lights appear, so to speak, then that transaction can be made?
Obviously, each of our clients has got slightly different workflows. We try and be as flexible as we can. So we have lots of clients that have their own technology that we integrate with, and we have some that just say, actually, I'll access your services, through one of the main providers. And there's a number of people that onward sell our services for us.
So it's not as if it's a one size fits all. It's far more bespoke.
Exactly, correct. And look, there's a lot of variety, right? So when we're helping governments or exchanges or hedge funds or asset managers, they've all got slightly different needs. So the great thing about having our own technology is that it's flexible and we can build what our client needs. And we've got some amazing stuff that is currently kind of in the pipeline that we're really excited to get out there.
What data set is it is it one that Coincover have developed over the years? Is it an integration of other data sets?
Yeah, both. Yeah, we buy in data. We also have the ability to apply machine learning, which is really exciting. So a good example of that would be, I would imagine that you're predominantly UK based. I'm sure you do a little bit of travel. So one would assume that you're waking up at 2 a.m. London time and withdrawing every penny of crypto you have and sending it to an address in a country which perhaps has high levels of fraud would be an unusual transaction for you. So that is one of the benefits of machine learning that would pick that up.
Right. So that it's not just necessarily all humans sitting there sort of with matchsticks in their eyes trying to monitor it.
Exactly.
There is an automated
of course.
learning process.
Yeah. And look, I think, the interesting thing, going back to sort of the insurance element, is that, the joy of crypto and the joy of blockchain is that this data is available. It's available to everyone. We can see it. I might not necessarily be able to associate it with you as the person that's sitting opposite me, but that data is available and the power's in the data. One of the phrases I hear all the time in conversations about big data is that data is the new oil, which I just think is just the most beautiful. We can have a whole other podcast about that.
I'll have to get you back for that then.
Yes, that would be another big one in a few years' time. So, as that data set grows, we're now in the position where we have got such an amazing data set across all our customers. And of course, the ability to buy data around machine learning just gives us a really good idea of what's safe and what's not.
No, that's a sensible way of doing monitoring in that respect, especially because for people who don't necessarily know how this works, sometimes addresses can be flagged as relevant to, terrorism financing or a scam. So if there's an ability to monitor that before you send money to that address, then you are in a much better position than you might otherwise have been. The second one I sort of looked at was, it says disaster recovery. The website, Coincover's website says that customers are able to take advantage of our uniquely non-custodial approach to backup and recovery of private keys and to secure access to digital assets. Can you tell me about that?
Yeah, sure. So just linking back to these poor people that, lose access and, find that understandably very stressful. And I think, particularly for, lots of people that have seen, I suppose, that wave of, the various exchanges that have come and gone, which obviously isn't great. And I think, since time immemorial, there's been bad actors, right? So I think the great thing about the disaster recovery is about not losing access.
Okay.
So we help people not lose access to their crypto. And we're not doing that on a custodial basis. We're not saying we'll look after it for you. We hold part of that key so you can get it running should you need to.
Right, because that's where the real risk when I speak to custodial services is actually holding on to the assets themselves. What does that look like? What do the insurance take out?
Yeah.
Like a headache.
And also that old phrase, not your keys, not your crypto, which, there's such an exquisite balance, isn't there, between, I don't write code. I'm not a CTO. I would find it personally quite frightening to be fully responsible for my crypto with no level of backup. So I suppose the great sort of balance there is that, we can never get to your crypto. We can't access it. We don't look after it for you. But should you lose access, we can get it back up for you.
Okay. And the last point, I think, is about customer protection. Again, from your website, it says that there is a proactive and customer-centered approach to keeping your retail users' crypto safe. Can you tell me a little bit about that? What does that mean? Yeah,
sure. So we help lots of businesses, which is great, lots of sort of asset managers and hedge funds. We also help businesses that have customers, so particularly the exchanges. So I think, again, go back to not your keys, not your crypto, all these exchanges that have had problems, whether, the exchanges cease to exist or whether there's been a bad actor that has essentially had their hand in the till, which obviously isn't great.
Yeah.
To be able to say to these businesses, this is a protection you can pass on to your customers is really popular.
Right. I mean, when I was preparing this, I was thinking about the world that I live in, which is about digital asset recovery, what that looks like, obtaining tracing reports, using the courts to freeze and return funds. What does your recovery model look like? Are you seeing any particular patterns? Is that something that I can even ask? Is that a relevant question?
So look, the recovery is not a market that we focus on. Our market really is the technology to make sure that doesn't happen in the first place. And I think just going back to the power of the data and the power of the blockchain, I obviously got the train here today. If someone had stolen, God forbid, a £5 note from my wallet, that's really difficult to track and trace. If someone steals £5 worth of Bitcoin from my wallet, we can see where that's gone, right? So I think, there's been bad actors since time immemorial. I can't see, illicit activity stopping anytime soon. So I imagine that will keep you in a job for a while to come. And I think the ability, it's good, So I think the ability to track and trace with blockchain is really interesting. It, means that you can go and get those funds back on behalf of your clients. But from our perspective, the data to see what's happening, that data set is ever growing, right? And I think that ultimately, if you can harness the right technology, protects your customers, which is good for the ecosystem.
Well, you're in the preventative stage. I'm in the bit that happens afterwards.
Yeah, sure.
Hopefully, if we're doing our jobs, everybody will be nice and safe. But it doesn't work quite like that.
Yeah, sure. And I think there is a sense that that some of the criticism of crypto is that it has been used to fund illicit activity. And I kind of roll my eyes a little bit when I hear that for two reasons. Firstly, because, physical cash has had a head start of a couple of millennia, but also that there's loads of ways that crypto addresses that problem, right? If we use the right technology and we have the right regulation. So I think, blaming crypto for being used for illicit activity misses a broader point.
Yeah,
really.
I mean, can we see where our £10 notes have been?
Yeah, exactly.
We have absolutely no idea. And just to that point, and I've even heard judges say this when in court, that crypto assets are not traceable. Just to clarify that exact point, it is incredibly traceable. We just don't necessarily know until it reaches a centralized entity in certain circumstances who is behind those transactions.
Sure.
It's just a point worth making while we're talking about
Yeah,
that.
definitely.
I was having a look at Coincover's LinkedIn page. So LinkedIn and websites are really the source for me.
Very good.
Especially about your about page. Coincover guarantees that digital assets will not be lost or stolen. What does that mean, and how can you make a promise like that?
Yeah, sure. So look, we are really proud of the track record that we have, which is fantastic. We're, as you can tell, very proud of the data that we've got. So as I've described, the combination of the technology we've got and the Lloyd's of London underwriting that we've been able to secure, which is fantastic, means that should our technology fail, we have the ability to put it right. And I think, to have that level of protection for our clients has been really positive in the current environment.
So it's a win-win, essentially. If your tech is working brilliantly, and if on the complete off chance that it isn't, the customer's protected in any event.
Yeah, look, and I think that, there will be at some point, someone who, going back to great Aunt Maureen, who wasn't a hacker and now is, that's not a situation we're going to be able to prevent. So, the backup that we've got for our clients is that we have the ability to call on that insurance and put it right.
Okay. What I'd like to know really is what is it that you're doing differently to others? I mean, I'm not going to name names, but I see monitoring services happen a lot. People sell these monitoring services. What they do exactly, I'm not entirely sure. That's why I do these podcasts, to figure out what people do. But they do these monitoring services and prevention alerts. What is it that you guys are doing differently? Where's the value add? And how come you guys have been called? And I was trying to find the quote for this. The best kept secret in crypto. I'm sure you'll tell me exactly who said that or where that appeared.
Do you know, I hear it all the time, but I don't know who came up. If you came up with that originally, let me know and we'll have to.
I was Googling it to see if it was.
Oh, were you? Okay.
One, but I couldn't find.
It does get said to me quite a lot, actually. So I think it probably reflects that we support some phenomenal names. I'm so proud of our relationships with Fireblocks and Copper, and, really sort of household crypto names like our client list, when I was first talking about coming to work for business last year, were like a who's who of crypto. It's phenomenal. But I think that because we're kind of in the background and, it's part of sort of some risk management and some compliance, it's probably not something that people sort of lead with. So I think, we're sort of quietly providing some really interesting infrastructure. And I think it's through, meetings like this and lots of sort of the trade shows and panel discussions to get on that kind of message. And actually, it was funny, I spoke quite recently, the last couple of months, with a really famous there's it's a business and a coin, as lots of crypto firms are. And we were sitting in the green room sort of waiting to go on stage, and we were sort of talking about what the day job was. And this is a really famous coin. This is like a top 5 coin. I think it was top 5 at the time, and it had a really good couple of weeks. And I happen to own some of this coin as well. And I said,
this isn't you plugging it, of course.
No. I'm not going to say it's obvious. And I said, and actually we protect you. And he said, I'm sorry, I didn't realise. I said, no, you're welcome. So actually, sometimes even the quite big businesses that have got a couple hundred people won't know that we're in that workflow actually. So I think the message is getting out there. My personal view for the crypto ecosystem is that, as I said, I would love us to protect every single firm that has crypto assets. And I think you look at what's happened in sort of the broader financial infrastructure in TradFi, whether it's Swift, or whether it's the protection you get on payments, or whether it's if you went into a shop, we're sitting in London recording today, I can't imagine going to a shop that won't take touchless payments, right? Whereas, if you're really old like me, you remember when you used to put your credit card in the crunchy machine. I must find out, it made a really lovely crunchy sound. You know the one I mean, yeah. And then touchless chip and pin was amazing when it came in, and then we had touchless and it was only a tenner, and it's gone up and now it's £100. And I think for me, crypto is just the next evolution of payments. And we were talking about cash before we started recording. I have some physical cash for the sort of council parking machines near where I live and the kids' pocket money. Apart from that, you can live with an Apple Pay and that's it, right?
I was looking for it the other day. I can't find my wallet. I'd use Apple Pay for it.
You should look for it.
I mean, I should look.
You should cancel your cards or something.
Somewhere in my house, I think.
Yeah. And I think, it's the next evolution for me. And I think, for us to be part of that infrastructure is really exciting.
I'd like to move on a little bit, because you and I have been speaking for a little while about a specific case, and I'm going to sort of tilt my head down to read properly from my sheet to make sure I get this all right. But there is a case, there's some proceedings in the US relating to Coinbase. The case is called Ferguson and Coinbase 23-CV-01004, for anybody who wants to look it up. It's in the district court in the Northern District of California. And just to give some background as to what this case is actually about. So an individual lost, I think, around $96,000 on the Coinbase website or app following a scam relating to a SIM card. Upon accessing his phone, almost all of his life savings had been drained from his Coinbase account, and the withdrawal was made via an IP address that was never associated with his account. The claimant says Coinbase have liability in that it was their responsibility for allowing the withdrawals that were made at the Coinbase, which was in breach of Coinbase's security procedures, and that they failed to monitor it. And he wants to, quote, obviously hold them to account. So, and I'm just reading from the sheet again to make sure that I get it all right. Coinbase responded, stating that the claimant was responsible for his own security. So clearly there are some issues around whether Coinbase could have done more and their own liability. And you reached out to me to see if there was a way to contribute to some expert evidence in that case. So what are the main issues here from the perspective of Coincover, and what value could you add here? Like, what is it that Coinbase is saying can't be done? What evidence could you provide? Like, what could you say?
Yeah, sure. And firstly, look, how awful for the client in question to have lost what I understand is his life savings. So, I'm very appreciative of how stressful that can be. Anyone that's been lost a fiver or anything else, it's really, truly, upsetting. So I think it's a really interesting point of inflection for the crypto industry as a whole, right? So there will be some terms and conditions. I personally do have a Coinbase account which says, you must keep yourself safe. Then these are certain things that you need to do. So I think it's very interesting. I think our argument would be that there are technologies out there that reduce risk and keep your client safe. And if those technologies are viable from a cost perspective, they should be implemented. And I think from a regulatory perspective, all that regulation that's coming in globally, which says, those clients need to be kept safe, and that, robust processes and policies need to be in there. So I think from our perspective, we can put our hand up and say, actually, it's highly likely that we would have caught that particular transaction. And of course, if we hadn't, we'd have the ability to put it right. So I think, I would expect to see a number of cases in the coming months and years that follow this pattern. I'm just going to very quickly divert to something that happened to me a couple of weeks, a month ago. So I tried to put an enormous bet on a sporting event. It was a fiver. And I was at home. It was the weekend. And I never bet. It was just a particular event that I was interested in. And I thought, I'll go online. I'll use one of the really big, heavily advertised gambling sites. And my current account, which is with a high street bank account, I got my credit card out and tried to use it. I think it was my debit card, because I don't think you can put bets on credit cards now, I don't think. Anyway, it was my debit card, and I was online and trying to feed the kids and run around at the weekend. And it failed. And I thought, maybe the website's busy. So I tried again, failed again. I'm like, it's a fiver. I'm busy. Don't worry about it. Yeah. And what happened was my high street bank froze all of my bank accounts because my £5 bet was an unusual transaction, because I don't bet, right? So they were looking at my account thinking, it's unusual activity. It took me 45 minutes on a phone call to re-establish all my internet banking and my credit cards and my, debit card, because they'd seen something and, pressed this big red button in some call center that said that's probably, not correct. So those policies and processes exist in TradFi. They exist in an even more interesting technological form in crypto. We should use them. So I think, with the regulation that's coming in and some of these legal cases that are being tried, and of course it's very interesting, it's in the US, where of course they have a litigious culture anyway.
Certainly do.
And there is a sense that their regulation is via enforcement, and of course Coinbase is one of the bigger players. So I'm really interested to see how that case plays out.
Is it a matter then, and let's ignore the legal points for now, but factually you're saying that actually, potentially, Coinbase could have monitored those transactions, and on the basis that funds were sent to an address from this SIM card that he never dealt with before, and because it was quite clearly suspicious, considering the history of transactions, that actually there may well be an ability for Coincover or whoever it may be to say, this is a service that is possible.
Yeah, correct.
It's available. Whether you buy it or not is different, and whether there is any legal liability is a different question. But at least this exists, and maybe they should have done more to protect this guy.
Yeah, sure. And look, all I've got is what I've been able to glean from what's readily available. But on the basis of what I have seen, that to me looks like a very unusual transaction from the information that I've got. and the technology is there to pick it up. And in our case, for any reason it was missed, could have put it right. And I think that is a fairly damning statement for, what is a really large exchange and what is clearly a very upset customer.
Well, it's upset enough to start a claim, and to be honest, fair enough.
Sure. And also, look, the reputational damage, right? So we talk about these exchanges that try and self-insure because they think, a certain number of our cases will go wrong. We don't want people playing us off online. Actually, it's likely that there's technology which is competitively priced, which is just going to help you from a reputational point of view and a risk management point of view. And I think, if the technology is competitively priced, why not use it, right?
Yeah, and maybe that's a commercial issue for some of the major players in the industry to say, actually, it's a sales point, right? To say, actually, if you store your crypto assets with us, then we have these live monitoring services, whether they're provided by a third party or done internally, fine. But it would mean that people have confidence to deal with those assets at that specific custodian or exchange. And I guess if anybody is listening from that firm, Miller Shah, and wants to get in contact, probably a good chance to do so, because it may well help their case.
Yeah, please do.
Let's turn to the Treasury's call for evidence in response to its future financial services regulatory regime for crypto assets, which you responded to. I don't know if it was you personally, maybe did you prepare it, or was it?
So it was signed by our CEO, which is great, but I was part of the working group which worked through what was quite a long debate to work out how we could contribute.
So what is it that the Treasury is asking?
Sure. So I think in the UK, we have been really privileged that they have come to the industry to ask for our input. So there's some phenomenal work being done. HMT obviously put out their request for response, which of course we were part of. There's some great work being done by Crypto UK. There's some really phenomenally competent and busy working groups at Crypto UK, which face off to the FCH and HMT. So I think, to ask the people that really understand this technology, and it's new technology, comparatively to, some of what's being used in, retail financial services or capital markets, the crypto and the DLT is quite new, right? So to come to the industry and specifically the tech providers that are writing this software, I think is a really good start, right? And I think, if you particularly look at regulation everywhere, but, particularly in the UK, there's been a number of technical advancements which the regulators had to get its head around. So whether that's, CFDs or it's peer-to-peer, I mean, this is going back in the day, right? But it's not the first time that new technology has come in that the regulators had to...
Always playing catch-up, aren't they?
Yeah, and look, I think it's really tough, right? I think a lot of money was lost in crypto globally before regulation came in and addressed it, and to have a market cap of trillions, which is essentially unregulated, is unsurprisingly open to abuse.
I completely understand it. And I understand that you published a response to that consultation. In a few sentences, and we'll get into some of the details in a minute, but in a few sentences, what was your response?
Yeah, sure. So I think we are very focused on pointing out why crypto is different to fiat. And I think particularly with some of the issues that we've seen with, for example, FTX and the systemic problem that caused, like the ruction that caused for the industry as a whole and the effect it had on the prices, it's, it set us back 6-9 months probably in terms of, where hopefully we would have been. I think we really want to make sure the ecosystem is as safe as it can be. And I think, the two things we specifically talked about was with self-custody, if that provider goes offline, you don't want to have no access. There's got to be an ability to get up and running. And I think, with exchanges, again, going back to this, not your keys, not your crypto sort of concerns. Again, if something happens to that exchange, maybe the technology fails, or maybe, someone tries to hack it or someone runs off with it. These are problems that are very specific to crypto, and we're keen to help be part of that fix.
Or I guess if the business goes under and all of a sudden then you've lost the access to your asset. So in terms of looking at both of those issues with self-custody for individuals and exchanges, those are some of the problems that you've highlighted. What are some of the recommendations that you made?
Yeah, sure. So we feel very strongly that backing up that key material should be a regulatory requirement. I'm personally talking to regulators in a number of jurisdictions. And look, if the various tech providers in the ecosystem that can help create safety, security and trust don't put their hand up and say, we're here, this is how it works, love to see it as part of the rule book, that's on us really. And look, I think, these regulators, to their credit, particularly, in the UK with HMT and the FCA, they're accessible, right? So it's on us as an industry if we don't raise our hand and start those conversations. And I think if you look at most, say if you're in crypto, household names of crypto, most of those big exchanges and big tech providers have now got some sort of regulatory lobbying policy team or, senior hire, because, it's a critical part of their strategy.
I get it. And look, there has to be some lobbying done by people in the industry because they're at the front line, the coalface of what's going on. And they sort of have to negotiate with lobbying body, with regulators as well as lobbying bodies to try and find a smooth path for everybody. I mean, it was the other day, it was the Parliament Treasury Committee came out and said that crypto should be treated as the same as gambling, and all the industry went, what on earth is that? So I think there's an element of having sort of the people in power listen to those at the forefront of the industry and the commercials, the people who are, I guess, running the businesses, so that they can understand each other. Because that seemed absurd to me.
And what really made me laugh is, if you've been in crypto forever like I have, there was a point at which if you made money if you're UK based, you made money on crypto, it was essentially considered gambling, so you didn't have to declare any tax. Then crypto did really well, and we had these massive gains, and it was like, oh, hang on a minute. And rightly, there's some very fine tax minds that have helped create tax legislation in the UK. I've done quite a lot of speaking with BDO, who've been quite sort of instrumental in that. So I think for sort of different arms of government to be saying different things, it is interesting. And I think I get involved in some quite high level sort of broader fintech conversations, right? Because there's a balance between allowing innovative fintech businesses to increase efficiency and give more choice to consumers and make things more efficient, and for 100 good reasons. And the UK is supposed to be the home of fintech. And look, you look at bodies like Innovate Finance, which are doing a phenomenal job there. The story of we are the home of fintech is the UK, and the coalface reality, which is dealing with government organisations and regulators, is often a little bit different. And I think there's some really good work being done by trade bodies like Innovate Finance or Crypto UK to try and keep that dialogue going. But look, different messages coming out of different government departments is something I've seen repeatedly over my entire career in fintech.
I noticed a word you said earlier. You said when different departments are saying different things is interesting. What I think I would translate that to in my head is unhelpful.
Hugely frustrating. Hugely frustrating.
Fair enough.
But I just thought the word gambling was so interesting because
it was so unhelpful to my mind.
Yeah, sure. And look, I think it sets back a lot of good work that's been done recently on, HMT consultation and, sort of what's happening out of the FCA. I think it's quite inflammatory, and I think it ignores a broader process where we are trying to regulate to keep, retail investors and institutional investors alike safe.
Yeah.
I think, words like that are deeply unhelpful, and I think set back that dialogue. And I've spoken a lot in the press about regulation. And I think about 18 months ago, the phrase that I trotted out about once a week was that the dialogue between regulators and crypto firms was marked by mutual mistrust and sometimes loathing, was the phrase that I quite often use. So I think we're probably in a better place now, but things like that. And it's such an attention-grabbing headline, right? Gambling,
crypto, crime. It's really unhelpful.
Yeah, and look, you kind of then think, well, if it's considered gambling, then why does basically every bank, asset manager, and hedge fund have either a crypto team or a blockchain team, or they're dabbling it, or BlackRock is pretty positive about crypto, and
this is
Danny talks about it. So you're like, oh, the word gambling. Oh, I'm not sure if that's accurate. I don't think it's. Is it fair? Well, I'm going to say no because I'm part of the ecosystem. But is it accurate when some people treat it as an asset, albeit a high risk and volatile asset? Is it gambling? When you've got $1 trillion market cap. So it's a very interesting sort of stance.
Yeah, my feeling is that because these assets are unregulated, therefore, in their view, might just be, well, it's just gambling then. Just put it in that massive pile of all things that are gambling. But I've realised that we've massively strayed off topic in that respect. But I'm going to, no, it's absolutely my fault. No, it's no problem at all. When you're dealing with Crypto UK, which you're saying you're doing a lot, what are the things that are on the agenda from your end? What is it that you're specifically trying to push? There may be lots of things, but maybe just a couple.
Yeah, sure. So I've got a reasonably long relationship with Crypto UK. At Coincover, we are proud members. I sit on a number of very busy and very competent working groups. So obviously there was a very long response to HMT, which was phenomenal. It's available online if you are of the mindset that you would like to read it. It was really contributed to by some of the finest minds in the crypto ecosystem. So well worth reading that. It's fairly long, but it's interesting. And there's lots of points that are either were asked for clarification or recommendations were made. So that's kind of is in now. There's a financial crime working group and an insurance working group. And I think what, Ian does really well, the head there is really flying the flag for those firms that are keen to do the right thing.
Should we say his name? Should we get a full
Yeah,
name?
Sure. So, Ian, if you're listening, Ian Taylor, doing a good job. And of course, holds two hats, right? So he heads up Crypto UK and also digital assets at KPMG. So again, I see him at lots of sort of trade shows and panel shows, flying that flag. And look, I think perhaps, in recent years, crypto has been the bogeyman to TradFi. And of course, we're at a very interesting point now where TradFi and DeFi are meeting and melting, right? And, if you look at the foundations of crypto, we're very much, it's decentralized and, we're outside regulation and, there will be no banks next year. And that is like, crypto on steroids, which is great. There's lots of people that feel that way about crypto. Personally, because I come from a TradFi and fintech background, I'm a lot more interested in the best parts of DeFi. And
why can't we carry all the best bits over?
Yeah, exactly.
Figure it out.
And I think the more that's done to spread the good work that's been done, and the more that's done to melt those two worlds, the better. I think
I want to move on to talking about the digital pound. The Bank of England is currently considering a central bank digital currency. They have a dedicated website. On that website, they say the digital pound would not be a cryptocurrency or crypto asset. As opposed to cryptocurrencies, which are issued privately, the digital pound would be issued by the Bank of England and be backed by the government. They've published a consultation paper. They've got a frequently asked questions section. Do you have any thoughts on any of this? And what might the benefit of CBDCs be?
Yeah, sure. So look, I think it's really interesting. We've talked about the evolution of money, and I certainly see central bank digital currencies as part of that. And to be clear, the vast majority of the world's central banks are looking at digitizing their currency. So the days are gone where if, I owe you a fiver, we go out the back and hive off a bit of gold and, then we swap it. Like, we started swapping sheep and then we swapped gold and then we decided that coin with that emperor's head in it was worth, a certain amount because we could swap it for goods or services. So for me, CBDC is the next iteration of that. The whole point of crypto is it's cheaper, it's more efficient. Allegedly, it's fair. I know we're going to have a little discussion about that philosophical topic shortly. So CBDCs to me are a very interesting point in the story of adoption because right now to use crypto, you have to really like it, love it and understand it. The point at which people use crypto without even knowing they're using it, that is the point of adoption, right? So we talked about, I took the train here today. It cost me 41 quid to get a travel card because I can't live out in the sticks. And it cost me a tenner to park. Yeah. I didn't do that with cash. I didn't dream of it. It just got done on a credit card, right? So I don't think, I'm paying for this electronically. I'm paying for this online. You just get your card out and it goes plinking at the end of the month. You're told.
It's all just easy, right?
Exactly.
It gets figured out.
And I think the CBDC is a story about how we can use that technology to be easier, but you wouldn't necessarily know you were using it. So the example I always give is, would your grandma be able to use it and not know she's using crypto, right? So I think, there's lots of CBDC projects all over the world. There's, of course, a number of countries that tend to be slightly smaller that are actively using it. There's a number of bigger jurisdictions that have it sort of on a trial basis. But I personally can't see that trend being reversed. And I think it's a little bit of a misnomer, right? Because whenever I see CBDC in the mainstream press, they love the phrase Britcoin because it's kind of like suggesting that there will be no pound, we're using Bitcoin, which obviously, of course, is not the case. It's just about using that technology to harness it for our lovely British pound. And I think, unfortunately, it does tend to get a little bit murky with some of the stable coins. And obviously, there's lots of chat from regulators about whether they pose a systemic risk. And that's when a business says, we'll have a coin that may or may not be pegged to, let's say, the dollar. Those can provide systemic risk, right? So I think
that's what Mika was all about. I think we're trying to protect against stable coins that were issued by government.
And I think the CBDC is the best version of that, but unfortunately, it does get slightly sullied by some of those stablecoin conversations. And also, look, some ideas of nationalistic pride. I can't. My kids love it when I give them a couple of quid in pocket money for mowing the lawn or doing some errands. I'm not sure saying, well, I've wired you some CBDC is going to quite have the same effect.
And you can check it on your
exactly.
account. Yeah.
No, a 5-year-old's going to be quite as delighted about going to the corner shop to buy sweets with their crypto.
So would you say then that the benefits of CBDCs are that they are just more efficient and that they are more traceable?
Yeah, exactly. Look, and I think it's been a very interesting journey over COVID. I know it feels like forever ago now, but I was writing at the beginning of COVID that I felt that COVID would kill cash because it's like seen as like physically dirty. You can carry it and everything else.
I don't think you're wrong there. I use cash a lot less, but maybe.
Yeah, it's true. Yeah. And look, I don't know about you. The first time I saw a little, sandwich shop that said we don't accept cash, I was like, it's a bit weird. But then actually no, because then you have to go bank it and it's hanging around. You might get sold and everything else. So yeah, the argument for CBDC is quicker, more efficient. From probably fairer and more democratic, but look, it can reduce fraud. So for example, a good use case would be, benefits fraud or all the fraud that we had over all the bounce back loans and, will we ever get them back? And, a lot of them were essentially fraudulent. There's a lot of sort of coverage of that in the press. So to be able to make our currency essentially purely digital is really interesting, but equally then there's some other effects that might not be as positive.
Yeah, I think there are two things here. I mean, we could sit and talk about this for a while. So I've got to be careful about asking too many interesting questions because they are great to hear your thoughts on it. Why is the system that we're currently using digitalized money in the form of tapping back? Why is that less good?
Yeah, sure. So the CBDC is about making digital our currency as a nation, right? And that is one step in advance. So whether or not we could essentially retire physical cash, we're not based on gold anymore. No one's going to the back, workshop and hiving off some gold for you anymore. So I think it's a very interesting question. There's that exquisite argument in crypto, if you're a libertarian, do you trust the government to do the right thing all the time, right? So that taken to the extreme would be, we've decided that we won't pay you your government pension or your benefits you're entitled to because perhaps you're a certain religion or perhaps you voted a way that the government doesn't want you to, or you're from an ethnic minority that isn't flavour of the month. Like those are not acceptable outcomes, right? But could the control of currency be used in the wrong way? And I think perhaps there are countries that we would be more concerned about that in.
Yeah. That's my feeling. When I sort of put this question, and the next question, which you've nicely sort of anticipated before, is about those libertarians among us. There's a guy, Andrew Howard, who I interviewed on this podcast a little while ago. I think of him because he is one of these guys who's, and he may correct me if I'm wrong if he's listening, who is suspicious of the link between government and money. And if we think about certain regimes in the world who would want to have a control over money based on maybe even credit score or social score, if you're thinking of a Black Mirror scenario with social scores, it may well be that it's not implemented now, but if the infrastructure is put in, maybe a particular regime will capitalize on that in 20 years, 50, whatever it may be. My feeling is that the tech, I don't know, I'm just suspicious of it to some extent because it seems as if programmable money in that respect may create more issues than the benefits in which it has. And we're talking about efficiency, etc. But is our system in terms of government-backed money inefficient already? I don't know.
Yeah, sure.
Whether there's an answer.
I think in the UK, look, let's be very quick to check our privilege. I don't want to get into a chat about how great we think our current government is, but I think overall, we enjoy some freedoms and protection as British citizens that we can agree that some regimes don't extend to their citizens. So I think it's very easy to sit from a position of privilege and say, it reduces fraud. If a drug dealer physically can't fund a drug deal in cash, well, actually, programmable money is amazing. There'll be no, you won't be able to, defraud for that, and you won't be able to deal drugs. And, we could, people like you trying to track down, assets will be much easier. But the flip side is someone that might abuse that. And I think, you look at something like, for example, social media. Social media Facebook was created to, connect people on a social basis. Fast forward to today, there's lots of questions about whether it's ethical they have that much data. What do they do with it? Can it be used to swing elections?
Exactly.
Teenagers committing suicide because of the pressures of social media. Like, that's not what the technology was created for. The technology was, we hope, created with the best of intentions. But equally controlling what that technology is used for, Black Mirror is a great example. If you haven't watched it, it's a series of programs about what happens when technology goes wrong. And it's really interesting, right? Because it picks up on themes that we are seeing today, right?
Yeah, and it was doing it a while ago. There's an episode called, I think it's Nosedive, where it's all about social credits, and you have to build your social credits to get points. And if you don't have enough social credits, then you can't access certain things. And I think that there are people in society who are suspicious of CBDCs on the basis that something like that would happen. If your credit score isn't a certain amount, then you can't access certain things, or even the other way around, that funds will be automatically taken by government before you can even say no to it.
And look, I think that for me personally comes full circle to regulation. I'm not going to sit here and debate whether Facebook and Twitter should be regulated, but I think for me the fix for that is regulation. And I think, technologies exist, whether they're harnessed for good or bad is a question of regulation, I think.
It's regulation. I agree with you. It's regulation. And I think people, certainly on the libertarian side, would feel more comfortable if it wasn't government backed. I think that's the bit that they're allergic to.
Yeah, sure.
Fully decentralized. And we can get into a debate as to what fully decentralized is, even if it exists. But that's my sense of it. I want to move on a little bit because you were featured in an article in Forbes recently called, "Is This the Real Reason Behind Crypto's $200 billion Bitcoin, Ethereum, BNB, XRP, Cardano, Dogecoin, Polygon, and Solana price boom?" It's a bit of a title, that. Talking about the market and saying that despite issues with exchanges collapsing and the introduction of regulatory frameworks, the value of crypto assets has broadly risen in recent months. Why do you think that is, and what was the article about broadly?
Yeah, sure. So I'm quite often asked by a variety of press outlets for my opinion. So of course I'm not a trader. And of course I don't give financial advice. But I think the point I was trying to make was that we've actually had quite a good year. So we're recording this in the summer of 2023. We've had a great year, right? So Bitcoin, particularly Ethereum, Ripple, Litecoin's looking quite good right now. So there's a number of coins, and I mean credible coins. When I talk about crypto, I'm meaning like the top 20. So
You're
still
about Pepe that's increased by however many thousands %.
Yeah. So I think that there are meme coins, and I've always been very negative about meme coins, right? Because if you look at Dogecoin, for example, Dogecoin getting to the same market cap as Barclays, the bank in the UK, is just mind-boggling. So I'm very interested in credible crypto. So by that, I mean essentially the top 20. So look, we don't need 20,000 plus cryptos, right? We are long due a big consolidation, and people are going to really lose a lot of money, which is very sad. So we're sitting here in summer 2023. It's been a really strong year. So you look at what has been achieved this year from Bitcoin, Ethereum, Ripple, Litecoin's looking quite good. I focus on credible crypto, so that top 20. We don't need 20,000 plus coins. A lot of those are going to
Pepe Frog, the increase.
Yeah, not good. So you look at that point at which Dogecoin was worth more than Barclays. It's just mind-boggling. So for me personally, you look at all the bad news that has come in the relatively recent past. FTX, Terra Luna, Celsius. Sam Bankman-Fried in the press morning, noon, and night. It hasn't been great. So this year, I think, has been more positive. Of course, in prices. When you get bad news, you get fear, uncertainty, and doubt. And I think in recent months, we've just seen the regulators getting themselves together. And I think really just that industry maturing. I think there's a real sense that FTX put us back probably 6 to 9 months, I think. Mm-hmm. And I think we're now just over that hump. And I think that the ecosystem is very nicely gaining credibility and gaining traction. And I hope to see that continue.
Maturity, I think, is the right word there. We're sort of clearing out, maybe, to use maybe an ugly phrase, but the sort of adolescent period, or the people thinking like that, clearing a lot of that out. Actually, there's a level of maturity in the market which is being seen by increased regulation and a fear of, I guess, the way that certain players are dealing with assets. And maybe they'll be cleared out as well, and we'll get a consolidated version of.
Yeah, and look, I see that across the board, right? So I will use some slightly stronger language, which is the regulation will drain the swamp.
Okay, yeah,
right?
Yeah.
So very shortly it's going to become. There was a point at which anyone could do an ICO. There's a great thing online with Erica Stanford, who, of course, very, very famous for writing about crypto scams, where she manages to set up, in a matter of minutes, right, which isn't great. So I think we are now past that birthplace of crypto where it was a free-for-all.
Yep.
We're now a lot more stable and focused, and those bad actors need to leave, right? And with regulation able to create enforcement, hopefully draining the swamp is good for the industry as a whole.
I completely sympathise with that and agree. It's about maturity. I think sort of coming to the end of this, and as you say, it's been recorded summer 2023. There has been a recent partnership announcement with Ledger, who are a provider of, let's say, hard let's just say hard wallet storage, like USB sticks. And there's been stories about this partnership. Can you tell me about what the partnership looks like and why it has made news?
Yeah, sure. So we are super excited to launch. We haven't formally launched yet, but as with crypto social media, there's quite a lot of chat. And look, I think, it's a relationship we are hugely proud of. It is arguably, one of the leading brands in crypto.
I have one, by the way. I have a Ledger, and I was in Colombia recently on a holiday, and I was talking to someone and they were looking for some storage, and I recommended a Ledger. Now,
oh, very good. Get yourself an affiliate agreement. Yeah. You should get in touch.
Yeah.
So, I think it, as you say, it's arguably the market leader. They've sold millions of devices. And of course, their Stacks device, which is a lot have been pre-sold and it's coming soon. So for us, I think there has been some sense of people that are very, very happy to keep their own crypto, which is fantastic. But this is not about the people that use crypto today. The hardcore crypto native, been doing it for a couple of years, happy to have, their own crypto under their own control. That's great. Yeah, that's fantastic. The CEO of Ledger is on record as saying this is about the next 100 million users. And I think it's about all those people today that have heard of crypto. Like 5 years ago when I started working it, no one had heard of crypto. No one knew what Bitcoin was. You walk up and down the road today, 9 out of 10 people I would imagine have heard of it. So it's about that next wave of adoption. And that to me is really exciting times, both for us as a business and for as an industry more broadly.
How are you working together then? Like what's the service that you're providing?
Sure. So there's a service called Ledger Recover, which enables you to recover your seed phrase, and that's called Ledger Recover, provided by Coincover. So really pleased to be working with them.
No, it seems like a very sensible thing. I know that there's some hardcore crypto people who have said that this is a negative thing. I sort of understand that a little bit. But again, it's not really for them, is it? This is for people who don't really have a day-to-day interaction with crypto. Maybe want to try it out and following that, know that there is a safety net.
Sure. And it's totally optional. There is absolutely no obligation or requirement for Ledger's current user base to use the service. It's there. And I think, there's lots of talk online from both the CTO and CEO of Ledger saying that they have been repeatedly asked for this service. And again, it's not about necessarily their client bank today. It's about that next 100 million users, which, is a game changer. So I think if anyone listening to this owns a bit of crypto, you bought some Bitcoin last week, last month, 5 years ago, whatever it is, if you want to see Bitcoin get to $100,000, which is always like the number that everyone kind of bounces around.
Is it not a million?
Oh my God, that would be really nice. So, if you own some crypto and you want to see it increase in value, which I think is most people that hold want, it needs more people using it, whether that is retail investors or institutional, and just opening up that next phase of adoption. And look, the adoption life cycle for any new technology tends to kind of have that ski slope. And it is technologies like the Ledger Recover that we provide that will create that.
I'm going to touch on this. It would be useful to sort of get your perspective if you're happy to answer it. But what are some of the criticisms that this initiative is getting, and what would you say in response to this criticism?
There's been some great content being put out from the Ledger CTO and CEO. You can find it on Twitter very easily. But actually what's quite nice is that there are a number of sort of crypto commentators that now say, even if I don't use this service, I do think it's good for the industry as a large. And that has been really lovely to see, just from the industry more broadly.
So in response to the keyboard warriors who are saying that this is bad for crypto, your answer is, well, it's sort of not for you, and it's to ensure that there's a mainstream adoption of this type of tech.
Exactly.
Okay. The last question I have for you really is given your knowledge, your involvement in the industry, what coming projects do you see as a real game changer in the space?
Well, Coincover, obviously. I've got to say that if for the team that will be listening. So I think we've talked about draining the swamp, we've talked about regulation, and we've talked about the industry consolidating. So I think for me, there's not a specific project I would highlight. I think what I would say is that process of consolidation, that process of draining the swamp, And I think what I call the interoperability between those projects, right? So when someone says, I'm going to come out with a coin, it's going to be called the Mac coin, and you can use it to, buy a Diet Coke in his living room. That's interesting intellectually. Do I think that will be a top 10 coin in the next year?
Yeah.
As wonderful as you are, probably, and as great as your podcast listeners are, probably not. So I think the interoperability between the various projects and the ecosystem it creates, I think, is really coming to its own. And I think in the next 6 to 12 months, it will be a really exciting space to be in.
Thank you very much for coming down. Really appreciate it.
Thank you for having me.
This podcast does not contain any financial or legal advice, and you should not seek to rely on it as such. Opinions are the individual's own. This podcast was produced and edited by Joe Howkins and music by Luke Carey. Thank you for listening, and see you next time.